Welcome to Bitcoin Escape Plan. These 2 points on the chart are the only 2 that are important right now. And in this video, I'm going to explain to you the reaction to which of those levels that we hit first is going to tell us what the trend is moving forward, as well as the higher time frame targets that we're looking for to understand the general momentum for the price of Bitcoin in 2026. Later on in the video, I will go over my recent trades and just my general what I'm seeing in the market right now for momentum. And then if you are new here, you can check out bitcoinescapeplan.com, where you can get a written breakdown of a lot of these thoughts that you can just read without having to listen to me ramble for 20-30 minutes in your own time. Over here, down towards the bottom, my 2025 analysis, you can just kind of see my track record for making these broad calls and why it is worth checking it out. bitcoinescapeplan.com. More to come on that website very soon. All right, super important. Let's check this trend out. We did just see a break of the Bollinger Band on the top of the 4-hour time frame. Now, that would typically indicate a short. I don't know if I trust that at the moment. It kind of looks like, because of these 2 things I mentioned earlier, that at the moment, we've been showing strength. This blue line here that I'm highlighting, this is the middle band of the Elder VWAP, as I refer to it, which is just an anchored VWAP that I drew from 2011 to now. So it's very, very old, that like a lot of candles that it's actually calculating the averages and the volume, for what it's displaying for us. And as you can see, we've respected that pretty well. Like when we broke down below it initially for the 59.9K spike, we respected it immediately after that when we were closing in early February. You can see price, look at that. Again, I drew this tool, a free tool on TradingView, the anchored VWAP. I drew that from 2011. Look how close the price is to that. Look how the wick is. The price really, really respects that. So we saw here as well, I was hoping that this meant we would continue higher, and then we failed it, and then we have failed below it. But again, we have retested and rose above it. Now we were below it longer this time than we did when we dropped to 59.9K. But why this is important is because over time, the price spends most of its time above the upper band. The upper band for that trend is this guy. That's about 96K at the moment. Price spends most of its time above that band. When it breaks that band, it heads towards the middle band. When it touches the middle band, what we need to pay attention to is how does the price react to it? And at the moment, again, it spends most of its life way up here in this whole region, up here and above it. So when it trends down to the middle band, so far it hit it quickly and then ran the other way. It closed above it, ran the other way, went down to it, ran the other way. It does not want to break lower, because the lower that it breaks, the more likely that the price has to trend towards the bottom band, which is currently sitting at about 36.3K, which is within the range that I talk about on this channel that I could believe as the bottom, that being 34 to 39K. I can see being the bottom later in this year. So what we want to pay attention to is price is respecting that middle band pretty well. So it keeps rising, it keeps closing. Even if it wicks below it, the candles keep closing above it. And again, I'm not redrawing this tool. This is a tool that's drawn from 2011, and look at how close those candle closes are to it. The price really wants to respect those levels the same way that it respects Fibonacci pivots and the Bollinger Band. So that tool is super powerful. It's another free tool that you can use on TradingView. Highly recommended. I want to say it's in this guy. It's in forecasting. Yeah, it's in forecasting under volume based. It's fucking dope. Use it. Tell your friends. So at the moment, the longer we can stay above it, and you can see this is the bottom band of the downtrend anchor VWAP that I drew, which I drew the downtrend anchor VWAP from the 126.2K all-time high in October. And what that one is providing information for is all of the volume and the price data since that point, which will tell us very similar. We spend now most of the time chopping between them. So that's this guy and this guy, as opposed to this other one. We spent most of the time in this instance, the price being below the middle band already, like well below the middle band, already very quickly into the drop. Yeah, this is late October. So what we need to see there is we've now interacted with it again for the first time since, I believe, January, end of January. We dropped below, we reacted to it and then dropped below January after barely holding on to it at the end of December. And now this is our first interaction with it since the end of January, which whatever, is just 1 month. Like it's not that long that we've been away from it. But this is going to be pretty crucial if we can start to see closes above that bottom band of the downtrend anchor VWAP, which this is mostly what I talk about in the newsletter today that I'll release right after I'm done recording this video. This is a central theme of what I'm talking about in the newsletter at bitcoinescapeplan.com, is like we're basically getting tightened in this channel. Like you can see this downtrend anchor VWAP continues to go down. The middle band of the elder VWAP is like not, it is technically trending up, but like not very quickly. It's like at a snail's pace that it's trending up. The downtrend is really the more significant one. So the price is going to continue to get pressure, in here. And as you can see, the Bollinger Bands are already tightening. We're seeing compression instead of expansion. Me personally, I don't like to trade compression as well. I'm better at trading expansion. I'm learning. So I'm going to kind of wait to see, which direction this comes in. Though, again, technically this would indicate lower. It's just that may just be to the SMA before it rips higher. Not super clear to me. Anytime it's like that general shape. I'm still kind of like really figuring out exactly what I like to see for entries when there are breaks. That kind of looks more like consolidation to me. There's nothing really preventing the price from ripping higher. And like I said, I think a lot of it is going to come down to, actually, I guess I said this in the newsletter, not on YouTube. I think a lot of it is going to come down to the daily close today. If the daily close is able to stay above this 78.7K Fibonacci pivot, then that's going to give the price some permission to try and go higher. Otherwise, it's just going to keep losing the daily SMA. Like it's been losing the SMA pretty significantly, I believe, since January, like middle of January, essentially, was the last time that we actually had, early January is the last time where we actually spent time above it instead of just significantly dropping below it. Sorry, there's a million things on this chart. We're done with the 4-hour chart, by the way. We're going to move on with our lives. But that's, I would say on the daily time frame, that's the most important thing. And as you can see, the price is like really struggling with that right now. We only have 41 minutes left at the time of my recording, and we are below that pivot at the moment. So that is going to put pressure, at the very least, it's going to put pressure going into the overnight session back towards 70 or 67.5 rather, which is the SMA. And the SMA is like basically just chopping. But again, that's like after, look how significant that drop is. This is the orange one is what I'm looking at. Like that's pretty ugly to the downside for like the whole month of February. So I've been talking about this for a while, that if we were to see the relief, it would have come at the end of February or into the end of March and mid of April. I just think that over time, and this is a good time to jump over to the higher time frames. I just think that over time, actually I got to show you on the weekly. It's more clear on the weekly. Over time, this weekly SMA is going to continue to get dragged further and further down. I talk about this in the newsletter. I think what I was originally looking for was one more retest of 96K. I don't think we're going to see it. I think that 97.9K in January is the highest that Bitcoin is going to be in 2026. I don't think it's going to get higher than that. So we already had 9 weeks, 4 of which we had significant attempts and only one real failure. These are just attempts that were regarded as failures short term in the price, but not like a true invalidation. This is a proper rejection, a proper invalidation. This is a girl who does not like you, bro. Accept it. Move on. That's what that means on the chart. So as this weekly SMA continues to get pulled lower and lower, you can see we're already below on the weekly SMA. This point here is relevant not only in the March and April drop of 2025, but also this recent December and even into the end of January. That's still super important. Those closing candles, that level. I keep jumping around, sorry, but right around there, like 86.8K ish. We're already below that with the weekly SMA, and I believe that the weekly SMA, by the time we interact with it, is going to be below this 80K pivot. The 80K pivot is not being it's not flashing as a current one right now. It's 76.2K that the price is regarding as the more important one. But similar to the other time frame too, like 70.2K on the daily time frame is no longer quote unquote relevant either. Like it's considered an older one. I still think it's super important for us to see strength there before we could go to the higher time frame ones. And it's the same case for the price here, where that 80K is going to act as resistance, even if it's not showing up as a Fibonacci pivot right now. It's going to act as resistance if the price at the SMA is there by the time that we interact with it. So really for this week, we want the price to close above 70.2K at the very lowest, and really somewhere between 70.6K and 70.2K, which is right around here, which I mark that as roughly the 50% mark of this range. So that would be like the lowest possible that we could close to have some argument of going higher next week, as opposed to if we close again after breaking above the 50% mark and then closing well below it again, that puts more pressure on the price towards 64K again, period. Like that's just reality. That's just how it works. And 64K is below, remember, the middle band of the anchored VWAP on the 4-hour time frame is at 65.7K. So, and again, the more times that we interact with that middle band, the more likely that we're going to start pushing for the bottom band, which is at whatever, 36.3K, 36.2K. So we do not want to see that. We do not want to see price close below about 70.2, 70.6K this week, that being on Sunday. Super important. Do not forget that. I'm sure I will mention it in every other video that I release over the course of this week. Like and subscribe. Anyways, that's what we want to see, is some momentum above that 50% retracement mark, or rather, sorry, 50% like the mid-range of this channel. But if price gets pulled down, this SMA gets pulled down to 80K by the time we interact with it, then 80K is going to kind of form maybe temporary support. Like say we shoot right through 76.2K. It's a best case scenario. Maybe we don't wick as high as last week, which the wick was 74K, right above 73.8K, which we've been talking about. I've been talking about that for weeks. So many weeks that I've been talking about that now. The price went right to it, there are psychological levels in Bitcoin that the price just needs to return to. 64K is one of them. So the only thing that we really have, other than knowing that we will go back below 64K, is that we have one more opportunity to retest the weekly SMA and fail it spectacularly, most likely. If we go back to 2022, this is our momentum. This is, for us, this just occurred, this exact candle, and now we're going to chop up and see, can we get above the 50% retracement for this would have been like in here, I guess, somewhere in here, or this one more likely. But you can see the price wicks above it, fails below it, can barely get above it, fails below it, finally gets above it, gets above the weekly SMA, and then fails it, going into the end of March and into April, and just continues to fail. And I believe it's also, I don't have Fibonacci pivots for the 2018 cycle, but you can just kind of imagine it's pretty similar, into, well, this is April that actually gets the rise, and in this instance, it's March that gets the drop. But regardless, it's kind of superfluous, like which month gets one, which one month gets the other, because like we just saw, January got the rise, and now February got the fall, and now March is going to get the rise, and then maybe April gets the fall. The trend is the same either way, that it's continuing to chop downwards for an extended period of time. Because, you can see this a little bit better on the monthly time frame. For anyone who's like, Bitcoin can't close 6 candles in a row red, like, that's not accurate. If we go over here, this is 1, 2, 3, 4, 5, 6. So totally possible, based on that bear market. And that is my partial assumption, that our low may actually be into January. Like, it may be fully extended. Our only evidence to the contrary of that is that we're already a bit left translated in terms of how quickly we are interacting with the monthly SMA. We interact with it later when we were already in the same progression, but again, pretty much the same in terms of like mostly dropping, having minor pullbacks that ultimately end in failure. That's pretty normal. So we would more likely see a couple more months being below the monthly SMA, but it is not impossible for us to see a break and probably failure of the weekly SMA. It's just like, I don't mean to laugh, but it's just hard for me to believe that we're actually going to stay above that. Especially each of these Fibonacci pivots are just going to form as resistance if we fail them. Like, we'll break 76.2K. I can totally believe that. But if we break it and the SMA is right there, we might be able to get a bit above the SMA, but same as over here, I think it's like 3 weeks that it's above it before it fails it. Yeah, 3 weeks before it's above it, and then it fails it. And it gets one more attempt, and then it just continues lower and lower and lower. And I think that that's what we're going to deal with, is it's going to get one more retest. And that's purely predicated upon the price closing above 70.2 to 70.6K on Sunday. If it closes well below that, I hate to break it to you, but we're going back to 64K before we are likely to go to 76.2K, which means that this weekly SMA is just going to get pulled lower and lower and lower, which means say that it is at 76.2K when we interact with it, and we have a strong impulse and we can break above both 76.2K and the weekly pivot. Well, all that means is that the price is doing exactly what it did here. The SMA dropped below, it was able to get to the Fibonacci pivot, it ultimately failed it. So it's slightly different than that, but very similar to that, where we're going to see this will give us less information the closer those are to each other. Like, that means we could form this as support and we could break the weekly SMA if it's there, but that doesn't tell us a fucking thing. Like, that means it might get to here and then still fail, which is still kind of what I expect. I would be very surprised if it gets above around here at 86K. I would be very surprised. I think that that's going to temporarily form as resistance. And I don't think we're going to get to 96. So it's more likely to me that in this instance, we can get a close at the end of the week somewhere up here, which gives us permission to continue rising into the rest of March. Maybe by March, we're able to close right around there, right around, and have an interaction with the bottom of this, or right up to it, sufficient enough that we can get a rise, into the end of March and early April. And then same thing. The lower this is, the less an interaction with it tells us anything. If the price is able to interact with this here, all right, well, cool. Not only is this clearly, we broke right through it, so debatable if it's support or not, because we didn't spend enough time there. I don't think it's very thin, super thin there. Look at that. Look at how thin the volume is there. Like, volume doesn't really pick up until 86.9K, which again, like I said, I don't think we're getting there. I think if we get into this region, then all of these people who bought it and they didn't know what they were doing are going to think, oh, you know what? I will absolutely lose $1,000 instead of 20 grand. Let me sell some of this Bitcoin junk. The fools! But, this is a psychology of a lot of the people in the market who are buying with IBIT, or they're buying MicroStrategy or whatever instead of buying the underlying Bitcoin. Like, these people don't have the conviction that you do if you're listening to this many minutes of my YouTube video still. Like, you believe in Bitcoin, you know, and I'm right there with you. I believe in it as well. But there are realities of the chart, you know, the psychology of human beings. These people are going to think, you know what, fuck this. I'm going to take my money and put it somewhere else because it's done me no good. I've had it in here for a year. It's done me no good, you know. Or maybe there are people who rebought on the way down and we're thinking that we were going to get another rise higher, and now they are starting to realize, oh shit, that might not come, you know. That's going to put a bunch of uncertainty when the price gets there, and I'm just of the opinion that it's not going to sustain. It's not going to be able to break past that volume. Who are the buyers? Where are the buyers? The US government is not fucking doing the reserve the way that we thought they were. They're not buying it. They're stealing it from other countries. They're seizing it legally, you know. That's how they're gonna get it, you know. And they're gonna find ways to like get the IRS to get it from people who are criminals instead of, you know, taking fiat. That's how they're gonna get it. That's how they're gonna fund that strategic Bitcoin reserve. They're not gonna take dollars and buy it. And I think that is what is required for us to actually see liquidity to return in a meaningful way, is people have to take dollars and buy it, which is my opinion personally. And this is the last thing that I said in the newsletter, and then I'll go over the trades real quick. I know it's a long video, but you should be used to that now if you're subscribed already. Really what we have to expect from liquidity is, I don't think that it enters the market until probably January 2027. It's my understanding that they need to get the Genius Act solidified, I think, by July, but it's my understanding the banks actually don't put it into full effect until January, which means there's no one coming. There's no big buyer coming, you know. Like, I'm seeing stories after the attack on Iran that like a lot of Iranian citizens are buying Bitcoin and they're moving it to cold storage, but they don't have the liquidity that is going to push the price to new highs. You know, they're catching a falling knife, and those people are fine. They're in a better situation, especially if I don't study the Iranian currency, but if it's devaluing or if it's having a significant devaluation, the same as like Venezuela or Argentina or anywhere else, then yes, it still makes sense for their money to go down by another 20 or 30% as opposed to 99%. Like in that particular instance, yeah, absolutely, Bitcoin is still a very powerful vehicle for you. And I think that you need to keep that in mind when you're looking at this chart, is this is composed of the 24-hour decision making of people from all over the world. Anyone who has access to the internet can decide whether it's a good idea for them to store money here or somewhere else. You know, Bitcoin just really gives a level of access that we don't see reflected by every other market. We're just early. It doesn't feel like we're early, but we're really early. You know, I do think over time that more and more money is going to flow into Bitcoin. I just think it's going to be slower and easier to predict. So me personally, there's no money coming until we get closer to January where the banks can start pumping it. And why is that? Because the banks are operating with the stable coins under wanting you to transact in volume instead of in like rewards or yield or something like that. They don't want you to stake a stable coin and to keep it liquid and for them to have to go do something with it in order to generate that yield. They don't want you to do that. They want you to move a lot of money, because that means that they have to hold more stable coins, which they've been directed by the Federal Reserve. That's what they need to do in order to produce stable coins, is they have to buy treasuries or cash equivalents of US dollars 1-to-1 with however many stable coins that they are, you know, not producing, but yeah, producing, whatever. Like, they're directly incentivized to do that, you know. They're fucking in bed with each other, you know. So for me personally, that liquidity is not coming until the banks can say, I, JP Morgan Chase, will give you $10,000 if you move $100,000 worth of money over the next 30 days or whatever. The same as like when they give you a credit card or like a bank account promo and they're like, spend this much money or move this much money and you'll get X amount of money from us. They're going to do the same exact shit with when the stablecoins launch. They're going to want their customers to use as much volume in those stablecoins as they possibly can. And that's when the money printer is actually going to occur, because the Fed is going to have to print in order to meet the demand that's going to be put on the T-bills market. So that is what's going on when the price is like this, is those types of monetary expansions and compressions. And me personally, I just don't believe that that's going to change magically just because people want the number to go up. Just because you heard Michael Saylor say it was going to go up. Michael Saylor is directly incentivized for you to continue to buy his stock forever and to believe that Bitcoin's going to go up forever. He's not directly incentivized to tell you accurate analysis based on what the chart fucking says, because everybody would sell and maybe not come back. I don't have anything to sell you, I'm telling you the truth as I understand it for the chart. So that liquidity is not coming, in my mind, until January at the earliest. And that's when we will see JP Morgan Chase is going to say, hey, I'll give you X amount of dollars if you spend X amount of stable coins. And then right below that, it's going to be a little button that says buy Bitcoin. It benefits JP Morgan Chase more if the price of Bitcoin at that time is way down here, so it looks like an attractive buy for their customers so that they dump an unreasonable amount of money in it. That looks better than if the price is back over here. If the price is at 100K, they're not going to be able to get as many people to buy as much possible in the hopes of using those rewards to buy more Bitcoin. It doesn't work that way. It works where it seems like a no-brainer deal, and that's when they hook you. That's when they're going to get. And in fairness, they're not doing this duplicitously, I don't think, other than, obviously they got slapped on the wrist for manipulating the gold market, so it's not really hard for me to believe that they're manipulating the currency market because it's a lot smaller. But technically, it's still a good deal for you, the individual, at that time to take that bonus. And to buy as much as you can as possible at those lows. It's just going to be predicated upon they're going to need you to custody it with them, in order to maintain the bonus or whatever. There'll be restrictions around it sufficient that it's just easier for you to keep the money with Chase instead of somewhere else. And that, that's the nuclear deterrent. That's what allows them to continue to do whatever the hell they want. All right, I've rambled enough. My tinfoil hat is off. I'm going to talk about the trades. I rambled too long on that. My apologies. You love it. That's why you're here. All right. So I entered this short too early. I broke my own rules. I wanted to lose money last night. I was in the mood to lose some money. Where did I do that? I think it was very late at night. Or I think I saw this guy. I was starting to notice we were headed towards is this morning? I'm tripping. I think it was this guy. It was this guy. So it was last night, super late. Maybe I can't see it on that time frame. I'm so sorry. I know. I've taken all this time to get to the trades, and now you're like, Jacob, get your shit together. What's going on? It was in these candles though. We were seeing some weakness on the 4 hour, and I was thinking, okay, we're going to see a rejection there, and it's going to go lower. I don't like taking trades when we are in the middle of the bands. I can't find the exact moment on the 15 where I was looking at. I want to say it's this, but that's the morning, so that's not accurate. So it might have been this guy, but I don't think it was at 3 o'clock in the morning. No, I guess it's closer to this. This is around midnight. This is the one. My apologies. Sorry that took me forever. So had I bought that up here, that would have been a good trade, actually. But I think I bought it here. So I had only a short period of time where, that would have been correct. And then was immediately, I think I ended up selling for a loss of $7, which still puts me up 31% in 3 trades. So you know what? Not terrible. I was trying to understand the 15-minute chart first, and I thought I was going to have a little bit longer where I could potentially take that profit. Now I know if you're trading on the 15-minute chart, I don't think you should hold on to that money for very long. I think you should really be willing to take that trade immediately pretty much and be out just as quickly. That's an hour and a half that you're in it and you're looking for 1%, and that's it. You move on with your life. You don't wait for longer. You look for the 1% scalp and you move on with your life. Otherwise, I think you're going to end up holding the bag and just getting wrecked. There were a couple instances where I think I could have closed for slightly less. Like this guy, I almost closed it for a loss of $3 instead of $7, but I just let it run. And sometimes that's going to happen to you. Sometimes the price is just going to not go in your favor, even if the overall trend is you're correct. Because I guarantee you that the price is probably going to break below this guy. That's 68.3. And again, we were talking earlier in the video about potentially having another reaction here or lower, 67.5. So if we believe that's going to happen, then technically that entry is correct. Technically even that. I mean, maybe not that one. That one's a little bit low, but most of these indications of a short, I mean, that one again, I don't see any reason why you would stay in the shorter time frame ones longer. Like it wouldn't be a sufficient enough evidence of like a strong entry. That's why I prefer it on the 4-hour chart, because it's like hard to argue that that's a short. Like, yeah, no shit. It's hard to argue that that's a short. Now, I closed mine there, but technically that one is still in profit. Well, actually, right now you'd be at break even. So again, I would think correctly. That was my first trade pretty much. Well, first one besides the one that got liquidated, but we're not counting that one. That I did that correctly. I closed it right when it interacted with the SMA. Could have had it go a little bit larger, but for the most part, I listened to my invalidation terms for exiting a trade, which I think are going to serve me very well. And just as a recap for anyone who hasn't seen those other videos, I'm looking for an entry based on either the top or the bottom of the Bollinger Band. And then I'm waiting either, like sometimes arbitrarily, I'm waiting for 1% or 2%. Especially with enough position size. I think, if you can take $1,000 and have it move 1% and make $100, do that, bro. Like why? Why would you not take that? And then wait for the next setup. And I think it just depends on how often you are taking scalp trades. Those scalp trades, I think, work a little bit better on the 15-minute timeline. So you actually want to use the 4-hour to snipe your longer ones, because that's where you can really get, you can catch momentum to some of these really crazy trends. And even again here, had I had the money, go away sticky keys. Had I had the money to enter that position from, the best place instead of, again, I was trading with like one contract just to practice it. That's a 40% trade in a very short period of time. Nobody is upset about that. 40% in 12 hours is awesome. That's great. Most stocks won't give you that in the course of a year. So to get that in 12 hours off of just looking at the Bitcoin chart, I would say is pretty good, But then would you have known to take that entry to the upside? I don't think that is as clear. So me personally, as I'm developing this, I really just want to be looking for candle breaks or wicks below or above the Bollinger Bands. And then I want to pay attention to either a reaction to a Fibonacci pivot or the SMA. So in this particular example, if like say I took the short like here, then 1% already would have been here. If I let it run a full 2%, I would have been at the Fibonacci pivot. So that would have been, technically, you could just wait for a take profit too, I guess, at 2%. From what I've seen so far, the 4-hour chart is most commonly going to move 1% from a Bollinger Band break. It will sometimes move in excess of 2%, but it is overwhelming that it will go at least 1% before it then goes up or back down in the opposite direction. Like this is a good example of one right here. Even for this guy, that ultimately you would have had exactly 4 hours to get out of that before you were in loss. Even in that instance, it still goes 1% in favor before ultimately breaking down below, and you would have been in loss. And that's one of the only ones on the chart recently. I think there's like 2 examples on the chart recently where that is the case. I believe this is the other one where technically you would have been correct, but you would have had to sit in drawdown for 8 hours, 12 hours. That one actually is pretty good. It's just dependent upon like how much can you sit in loss, which this one is not bad. You would have been 1.5% in loss, which is not crazy. Like even that $7 that I lost, I was probably like 1.3% in loss. Like not crazy, not that big a deal. I got to be honest, I really like trading these contracts so far. Like I still have a long way to learn with the strategy, but I think doing it this way, where I'm looking specifically for candle breaks, either above or below the Bollinger Band, I'm paying attention to the reaction at Fibonacci pivots and the SMA and closing either on those arbitrary 1 or 2% targets, depending on how the market is moving, or allowing part of the position to actually react to the SMAs. And ideally, in an instance where you buy 10 contracts, you close 3 or 4 of them, you close 3 or 4 of them, you close another 1 or 2, you let the rest run. Like that, I really think is the best way to do these until you get either very confident or I guess make the strategy more complex. I really like it actually that it's not super complex. I'm using fucking 2 indicators and the volume one. Like I am going to start paying for TradingView soon, so I think I'm going to switch that to Bollinger Band width and a couple other things, because that should show me actually like, oh, the width is probably to here, and that's what actually caused the wick there versus the candle close. I think that that's going to be a really useful tool. I'm looking forward to adding that one, but I mostly do this as well just to show you guys that like it's not that complicated. Like you don't need to have like a crazy strategy. You just need to have clear rules, which again, my rules are if a candle or a wick breaks to either side of the Bollinger Band, if it breaks to the bottom side, that typically indicates a long. Now that may not be very long that you are able to be in that position, but that's what it indicates. It is telling you the price is going to go up. If it breaks the upper band, what the price is telling you is that the price is going to go down. So we just broke the upper band, and even though again it's in a period of compression, I don't like trading compression as much. I guess this one isn't that bad. That one at least has like a slight uptrend, but I prefer expansion. I think like this is clearer to me. I understand more what's going to happen. I understand more what's going to happen. This is compression and we don't even have an interaction. Yeah, like this guy. Technically, that's a great one. Damn. Yeah, that would be really good. You just have to be very patient. And for a lot of these longer term swing ones, you just need to be over collateralized. Like you just need to have a lot of cash to be able to sit and be patient, because you can just catch broader swings. Like I'm talking about just the 4 hour and looking at the 15-minute for scalps, but technically, you could be trading. I don't think the daily is quite as reliable. I think a lot of these you would have been in loss. Had you longed for any of these, you would still be in loss. So I don't like the daily as much. You could definitely use the weekly. Like technically, we just touched on the weekly, so we could get a rise. Like this guy here, had you caught that, go away, sticky keys. Had you caught that here, you could have got a 20% rise before we failed at that 97.9K level. 20% is awesome, dude. That's really good with 10x leverage. That's 200% on your money. Congratulations. Like that's a shitload of money. So there absolutely are, like let's see what this guy was. Because I didn't know about these last year. Now that I know about these, Jesus, that's fucked up. 60%, that'd be 600% on your money. Assuming that you can sit through all those overnight periods and pay all your perpetual fees, which I gotta be honest, is every time I've run the math, it's worth it, 100 times out of 100. So you could, if you really wanted to, only take entries based on the weekly, but again, this is another instance where that's less clear than the 4 hour. That one, if you caught it on the wick, you would have had a short period of time. Come on, work with me. Go away, hotkeys. Still 8%, 10% is very good. But that would have been a short period of time that you had to get out of that trade. Less than a week that you could have got out of that trade before you were in significant loss. This one as well. Like you're basically in significant loss right away. All of these, you have like a short little like 5 to 10% run at most that you can get, and mostly in a period of consolidation, which means for this one, that would have been terrible because you just would have been paying fees that whole time. This one is historic. That one's great. I wish I understood about these contracts back then, but these contracts actually didn't exist till here. So in fairness, the first one you could have taken really was this guy, and that's not quite as clear. So I really like it. I would say more primarily for the 4-hour and the 15-minute. I haven't really looked at it that much for the monthly time frame, but those are pretty clear to the downside. Yeah, I mean, if you really wanted to be super picky, you could take it by the monthly. You would have basically no long signals, so I wouldn't be using it for that. The weekly, I guess, is a little bit more clear for that. Let me do a quick analysis of that real quick. I mean, technically on a long enough time span, these are all longs. I wouldn't say leveraged longs though. Like that's the only one that there's an argument for a leveraged long, and that's like the proper bottom. If you had leveraged longs for most of these, not only would you have been, let's see what this guy is. You would have already been completely liquidated. For this particular case, if you did 3.3x instead of 10x leverage, then technically you could have sat in this position and you would have just lost 80% of your money before it starts to head in the other direction. And you would have been paying funding fees that entire time. So that's why I think you really got to be smart in a bear market when applying leverage at all. It's very easy to get wrecked. And what I'm learning from experience is I think it's actually a lot better to trade the higher time frames just with spot, meaning you pay attention to the trend, you buy a lot or sell a lot at specific time periods, and then you can take action on these shorter term swings, because to me, it's a lot more reliable to watch the price go from here to here over the course of like 3 days and to still catch, like this is, oh my God, Sticky Keys, you're killing me. That's a 10% move, which again, most of those instances for those monthly candles, that was the best case scenario. It was about a 10% move. So you can either wait for that to happen a couple times a year, every other year, or you can find opportunities like that every couple days on the 4-hour chart. So I do think that's more reliable. I'm starting to study the 15-minute more for the scalps, but at the moment, I'm not sure if I'm going to take this short or not. I'm not in one now. I did just lose money on one just from being too early, but I am a little hesitant where the price is in compression, and I might actually be more interested in seeing if I can get a long entry, which I think I had previously mentioned over here, that I thought we were going to get the price to come down to 67. And we did. We ended up breaking below it, but not with an interaction of the Bollinger Band. So for me, I wanted something like this. So that's kind of what I'm looking for now, is if we're interacting with this now, and if we have a weak interaction with, oh shit, we're about to close the day, actually. This is important. I've been rambling that long. 6 minutes. All right, well, at the moment, it looks good. That will put some momentum towards the upside, but that doesn't mean that it's not going to retrace in the short term, and it does look like it's going to retrace based on the 4-hour. That is going to put pressure towards here, but price might be able to hold some strength there at 70 or 67.7K, which I believe, 67.5 is the daily SMA. So it's possible price could retrace as low as that and then show some strength. But I don't like trading compression as much. I like expansion. Expansion is clearer to me. That means that we have more room to run in either direction. I'll give an update on Wednesday. This video is way longer than I meant to be. My apologies. I'll see you on Wednesday. Let me know if you have any questions. Have a great day, everybody.